Vaibhav Sanghvi of Avendus Capital joins us right now on the show. Vaibhav, is always very good having you. Neeraj here. Good afternoon. What are you sensing, Vaibhav? I remember our conversations before the election verdict was due, and you guys had mentioned that you are sitting on a sizable pile of cash post the election verdict being out, but the growth numbers not looking all that strong. Are you starting to deploy some of it selectively, or do you believe that better times will come?
No, I think we've started deploying that kind of money, and with a clear assumption that you might not see a near-term recovery on the economic data, but looking at 1 to 2 years down the line, having continuity into the government and the policies, we do estimate that things would recover sooner than expected. As well as what we do think is basically, the pain of last 9 months in terms of consumption, lesser liquidity, and so on and so forth, I think is on the mend, and liquidity has increased into the market. And subsequent to that, I think we will see recoveries into discretionaries and consumer sectors as well going forward from here. So we have started nibbling into the markets. And we are more constructive on the markets as expected, or as compared to what it was earlier.
Okay, is this a factor of the political stability coming in? Because aside of that, before and after elections, the growth numbers haven't changed. If anything, the commentary from a lot of corporates about what the extreme near term looks like is a bit cloudy as well.
No, of course, Neeraj. I think no two ways about it. I mean, whatever we are hearing in terms of the ground reports and the commentary has not been very, very encouraging. Having said that, what is extremely clear, or what we do see is basically that before election period and the post-election period, once the currency in circulation gets decreased, the liquidity in the system gets pretty robust. And over and above that, the interest rate outlook is pretty soft, both global and local. We do think that there is a point in being into assets, and in assets, especially in equities as well. So our point of view is basically that risk money is there. It's just about time, probably a quarter or 2 quarters. I mean, you will not be precise to the timing of when the recovery starts happening, but it's just a matter of time when recovery starts happening, because India is a beautiful demographic country, right? In the sense that there can be postponement of demand, but the demand would come in at some point in time. So once the overall factors are pretty much in place, like interest rates and liquidity, we do think that it is just a matter of time. So thus we are taking a call with a perspective of 1 to 2 years, and we do not want to be very honest. We don't want to time to the precise point at when the bottom happens, and then you will be able to get in terms of the whole deployment. It's always a staggered process.
Okay. Hi, Vaibhav. Good afternoon. What's been your reading so far, the sort of reaction that one is seeing in the broader markets? I know there are some highly leveraged groups and companies where, promoters have pledged their shares. The free fall that one has seen in the last few days has only dented investor sentiment. Do you see this phenomena continuing? Was it inevitable, it had to happen, or one can now use this as an opportunity even in the broader markets?
No, of course, broader market is going through some sizable turbulence, right? What is happening to many of those stocks, seeing sizable stock depreciation in terms of the prices. Those guys who are leveraged, who are not able to manage the balance sheets, are the guys who are on the receiving front at this point in time. This is a painful, period for them. But I guess post this, cycle which gets over, you might have some amount of opportunities there. However, till there is certainty, or till the wider economic growth happens, I would refrain from entering into those kind of mid caps. Till then, we would stick to large caps where the relative safety is better.
Vaibhav, what are your interactions indicating? Because euphoria post the election has completely ebbed now. In fact, the sentiment has turned negative. The pace of money which we were seeing from the FI desk post the elections has also stopped coming now. So will this phenomena continue going ahead with regard to foreign money flowing into the market? Will it take some time? Because we've seen recently growth levels also being lowered by Fitch.
No, of course, global growth is a problem. But what we saw immediately after the election is more to do with the worries on the emerging market front, and primarily from China because of the US-China trade tensions. My sense is basically once, after yesterday's Fed policy, when the whole outlook for interest rates is pretty benign and liquidity also is very comfortable, as well as from the Europe, where Draghi has been mentioning that they'll continue to be pretty accommodative and supportive to the economic growth and inflation. We are in a scenario where liquidity is pretty abundant at a very cheap rate, right? So once that happens, you will start seeing some amount of flows probably back to emerging markets. It's just that markets may be waiting for the G20 meeting, which is a week hence, and try to gauge what is the effect likely to be for US and China in terms of their trade tensions. So once that is out, and here on an India perspective, we look or anticipate towards our budget, we do expect that markets should be pretty okay, and we would continue to see FPI flows in the medium term. Our outlook is that India among the emerging market space is one of the best, so we'll continue to attract better flows than the other countries.
Mm-hmm. Vaibhav, you guys are large money bags. It'll be interesting to know where is it that you're finding favor right now? Where would you deploy large chunks of money?
So in terms of preferences, I mean, we have been saying for long that banks and financials are something which we really like, and we are bullish on the corporate banks. At the same time, we are not ignoring the retail banks as well, which are on the private side. In terms of the PSU side, we are constructive, but we are waiting for a couple of things to happen, and propose that we may be looking at it in a very favorable manner. Apart from banks and financials, we continue to be bullish on consumers, and in consumers both staples and discretionary. We think that the pain period of last 9 months is back, and we should see recovery in the next couple of quarters. Add to that, on the industrials and infra side, looking at the impetus with the government is putting on in terms of the investments, we do think that that's also a pocket which can be looked at on the favorable side. Having said that, what do we not favor currently is still we are avoiding the NBFC space or companies who have weaker liability franchise.
Vaibhav, you mentioned consumer discretionary, and within that, autos is one pack where the numbers in the last few months are not looking great and all, and the slowdown is pretty much evident now, which is also had an impact of liquidity crisis that the system is facing. Do you then expect some bit of recovery to come by in the auto pack in the second half? Is that the space also you're looking at within the consumer discretionary pack?
Yes, we do expect that to happen. Now, also what we need to understand is basically the auto numbers and the kind of slack which the industry saw. We have to realize that it was post last September when the whole NBFC issues also started. Add to that, we ahead of election, we saw currency in circulation going up, and the translation from M1 to M3 was not happening. Thus, we saw pretty tight liquidity conditions, tight monetary conditions till April, and once that gets resolved, and which we are seeing that getting resolved, along with bonus of lower interest rates, we do expect that recovery to happen pretty much in the second half. Because there you will also see the festival season also coming in. Thus the pent-up demand which is there for last 9 to 12 months should be witnessed, or we should witness in next 1 to 2 quarters.